Ladies and gentlemen, good day and welcome to the TALBROS Automotive Components Limited Q2 FY21 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of the call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Talwar, Joint Managing Director of TALBROS Automotive Components Limited. Thank you, and over to you, sir.
Thank you so much. A very good afternoon, everyone. A very warm welcome to our Quarter 2 earnings call. I hope you all are staying safe and healthy. On the call today, I'm joined by Mr. Naveen Juneja, our Director of the Board and our Group CFO. We also have SGA on the line, our Investor Relations Advisor. The results and the presentation are uploaded on the stock exchange and the company website. I hope everyone has had a chance to look at it. Before I get into any details about industry and our performance, I just like to highlight that we're extremely pleased about our performance in Quarter 2. I will let Mr. Juneja talk in detail about these numbers, but it is a very heartwarming performance by our company. Let me begin with a few updates on the industry. The effects of COVID on the auto industry are still extensive. The entire world was chasing around to absorb the collapsing demand and the fall of supply chain. India's auto sector, which contributes to more than 7% to the nation's GDP, was struggling with the extended slowdown when the lockdown happened. Who knew that the safety of an individual will be the cause of huge impact on the economy? However, the human being is a smart creature and he always finds a way out and adapts. The world has started living in the new normal, which is indeed transformative. There has been a fundamental change in demand by the consumers within the auto segment, which should not be overlooked by the industry and must adopt to capture the market share. There have been several first-time buyers. A lot of shift has happened from shared mobility to personal mobility, and this you will all see has resulted in the auto industry doing very, very well in the quarter. The automakers are emerging from the persistent downfall over the past few quarters. The festive season, linked with personal mobility and pent-up demand, has illuminated the demand, and the automakers are now hoping for recovery to last longer even after the festive season is over. As per the data published by CM, the total production of vehicles for quarter ending September 30th showed a degrowth of -7% as compared to the same period last year. While on a monthly basis, there were improvements in the performance. The total production of passenger vehicles, three-wheelers, two-wheelers, quadricycle in the month of July showed degrowth of 29%. In August, 3%, while September finally showed a growth of 12% over last year September. Basically, even though the Quarter 2 is showing a decline of -7%, the real growth started coming in the month of September. Also, it's been a little staggered growth. First it was the tractors which came to the growth, then the two-wheelers, and then finally the passenger cars. I'm proud to announce that in the challenging times, TALBROS countless efforts to build a strong order book is giving us fruitful results. We are in the process of executing an order book of $31 million over the next 5 years for both the domestic and the international market. We are constantly working on increasing our export percentage to our top line, in which you will see in the presentation how it is moving in the right direction. Let me give you a quick brief about our company. Our business is broadly divided into our standalone business, that's gaskets and forging, and our three joint ventures with global auto leaders for gaskets, suspension and chassis, and as well as anti-vibration components and hoses. We are a very hedged auto component supplier. Of our domestic sales, 36% comes from two and three wheelers, 28% comes with from the passenger car segment, 18% comes from the heavy duty commercial vehicles, 11% comes from the agri and the off-roader. So we are part of the entire spectrum of the products that are manufactured within the country as well as internationally. Let me give you some details on the segment-wise business. Let's start with the gaskets and forging, which is our standalone business. In our standalone gasket business, we continue to hold a healthy market share domestically. We are the leaders in the country, and we are ahead of competition by a long way. Our focus on BS6 product line and OE export business is really helping the cause of the gasket division. Along with the joint venture, we hold a near 50% market share in this segment in our country. As mentioned to you earlier, we worked very, very hard to move from BS4 components to BS6 components because, as you know, a gasket is a product that gets fitted on the engine, and all the engines have changed from BS4 to BS6. We have successfully commissioned all our OEMs with our BS6 product line, which also helps in adding some value added and increase in value per component for our division in the commercial vehicle space. We are particularly focused towards increasing our utilization levels of our post-coating lines, as this will reduce our imports and result in cost saving. Our continued persistence with our raw material supplier called Lidl is helping us getting local materials supplied to us from Q3 onwards in India itself. This will tremendously improve in reducing the operational cost, it will reduce working capital days and help in return ratios. I'm very proud to announce that we made very significant inroads into the heat shield product line within the country. We have secured some large orders from domestic OEMs for the first time in India for the heat shield product line. This is a product of the future. It's a product for noise, vibration and heat, and it is something which is going to be there for a long, long time, and we have secured orders from the three biggest car makers in the country. The forging business is an outlier this year and in this quarter, which Naveen will take you through once he talks to you about the numbers. But we are getting a lot of traction from our customers, both domestically as well as internationally, on the current businesses and going forward. Our forging business has a market share of 50% in exports. This is an achievement we are very proud of, that we're exporting almost half of the revenue is exported to all over the world. We are also now moving to heavy value machine components, which will improve our margin trajectory, which you'll also see in the numbers in the speech ahead. We have completed the installation of the 2,500 ton press, and now we are a one-stop forging plus machining house from 750 tons to 2,500 tons. Coming to our joint ventures, we have a joint venture with Magneti Marelli, which is a very large conglomerate based out of Europe. This is for basically the chassis components. Even in our joint venture with Marelli TALBROS, we continue to supply to the leading car makers in our country for suspension components, and we also have our export percentage of about 25% from leading car makers in Europe at the moment. TALBROS Marugu is one of our youngest companies. This is again a joint venture with Marugu over Japan. This company manufactures anti-vibration components and rubber components and hoses for the automotive industry. Here also, we're very proud to say that we did face a lot of headwinds out here with the diesel ban, and a lot of our products were for the diesel engine, but we very swiftly moved the product portfolio towards petrol vehicles, and we are supplying in a big way to the Indian car makers and also exporting back into Japan. All I can say is we are a multi-product company and into multiple segments. Our strategy to gain market share domestically and to keep knocking on the doors of global OEMs is paying us dividend. I'm pretty hopeful that the growth that we saw in quarter 2, I'm very hopeful that the momentum continues in quarter 3 and quarter 4, because I still feel that the commercial vehicles are yet to pick up speed and where we are a dominant player. With this, I'll let Mr. Juneja update you on all the financials for the quarter. Thank you so much.
Thank you, Anuj. Good afternoon and a warm welcome to all the participants. Let me begin with the financial overview. In the gasket division, including our JV Nippon Nickel Talbros, for Q2 of FY21, our standalone gasket sale was rupees 67 crores as against 61 crores in Q2 of FY20, a 9% growth we achieved in that quarter. On a half-yearly basis, we reported rupees 98 crore revenue as compared to rupees 134 crores in the previous year, the same half-yearly basis. Revenue of NLK was 11 crores in Q2 of FY21, same as Q2 of FY20. This segment saw a EBITDA of almost about 11.4 crores for Q2 of FY21, 10% growth YOY basis. Forging division. The forging business has continued to perform well. The revenue in Q2 FY21 was at 42 crores as against 30 crores in Q2 FY20, a healthy growth of 38%, which is the highest growth among all the products segments of our company. Now coming to Magneti mainly Talbros Chassis Private Limited, our share in the total income for Q2 21 stood at 16.2 crores versus 15.8 crores in Q2 of FY20. Coming to Talbros Marble Rubber Private Limited, our share in total income for Q2 FY21 stand at 5.5 crores vis-a-vis 5.6 crores in Q1 of FY20. Now coming to the consolidated financial performance of the company. Total income, including other income, stood at rupees 110 crores in Q2 of FY21 as against 92 crores in Q2 of FY20. Talbros has reported double-digit revenue growth on a year-over-year basis during the current quarter and has more than doubled the revenue as compared to Q1 of FY21. EBITDA, including other income, stood at rupees 17 crores in Q2 of FY21 as against rupees 10 crores in Q2 of FY20. Continuous focus on cost optimization resulted in positive EBITDA during these challenging times. Our PAT stood at rupees 10 crores in Q2 of FY21 as compared to rupees 3 crores in Q2 of FY20. From October onwards, against various cost-cutting measures which were undertaken, we have one of the cost-cutting measures was the salary cut on the graded level among all the employees. We have reversed that cut from 1st October, and we hope that with the increased businesses which we are expecting from the commercial vehicle segment, and with the balanced cost-cutting measures still in force, we expect that there will be hardly any marginal drop in our EBITDA level, but we will continue to perform better than what we did last year. We continue to book orders and new set of customers along with a long-term relationship with our existing customers. This is all from our side, and I would now like to open the floor to questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Yeah, thanks for the opportunity, sir, and congratulations on good set of numbers. Sir, firstly, on the revenue side, could you help us out? How do you see revenue growth going ahead in terms of how do you see, under various divisions, the revenues could be over the next, say, a year and a half kind of thing?
I can't, if you see, talk about a division wise, okay. Let's come out of gasket division. First, we see that quarter 3 and quarter 4 should be at the same level, it should be on a better level, not below the second quarter. We foresee, because October was very good and November seems to be okay. And we foresee, because of the commercial segment yet to pick up, we should be able to achieve better results as compared to second quarter in gasket division.
Mm-hmm.
And next year, if I think with the medicine we being announced, which will come to India by that time, definitely, we see a better growth in the next year, FY21-22, with the new businesses also coming in force by that time. So we see a double-digit growth in that business, definitely. Now coming to 14 division, the order book is strong till now. And what we have achieved in the second quarter, I think we will be able to match in the next 2 quarters also. And next year, on the full year basis, we should be able to achieve a growth of minimum 50-20% in this business. Now, Nippon JVs and they're coming to MMT. MMT should also able to perform even better in the second half, because Jaguar business, which was lying low in the first half, is now started picking up, and we should see a good growth in that business. And from next year, we are expecting one of the orders which is received, the implementation of that order will start from next year. So we'll see minimum double-digit growth in that business also as compared to next year, in FY21-22. Now coming to Marubeni, the buyback proposal will start from January onwards, and we are very, very hopeful that is a huge buyback of more than 10 crores Marubeni will take from our JV. So next year I see a double-digit growth in this business also. That is what I can say about my business as of today.
So on exports, we sounded quite positive. Could you help us? What are the opportunities we are looking in exports?
Like we mentioned earlier, we've secured more than about $30 million next 5 years. That's all on track. We're also working on some other OEMs with some newer order book, which will probably have more clarity after November. But all on track and very positive, and I think we should continue the momentum going forward.
Yeah, we are in the process of closing some good businesses with our export customers. We will announce the same as soon as they are closed. I think
maybe next quarter.
Okay, and sir, how is the aftermarket doing now, post gradually opening up of the economy?
Yes, aftermarket from October has started picking up every day. This quarter we see definitely growth as compared to second quarter, definitely.
Great. So on the margins, we reported pretty good margins. Now you talked about maybe salaries have been restored from October, so we will see some increase in employee costs going ahead. But as respect to certain cost initiatives that we have taken, could you just help us what are those cost cutting, cost items that, where we are looking at which will sort of, come down going forward on a structural basis?
Yeah, it's regarding one of the stuff is import substitution. That is will be in full force from 1st January. Okay. And second is our other measures, travel, entertainment, business promotion. These are small stuff and which will be enforced in the end of the year. And there are increased productivity, etc. We have taken BAV activities. That is, we are full focus on that. So all these measures plus the increase in top line and good product mix, export being going to a better share of export in the total sales. We hopeful that, of course, we'll be able to maintain good EBITDA level.
And so lastly, on the localization of the raw material cost that you talked about, could you help us how much positive impact we see on a working capital cycle because of that? Any numbers you could...
The total, I'm talking about the Bajaj stuff, it is approximately 18 crore per annum if we start full from first. Partially it has started, but in full force it will become for first January. If we say calendar year, 18 crore with the impact. First, my rubber, I have localized the rubber. That is impact of around 5-6 crores of that. This 20-25 crores, 25 crores, it will reduce my stock levels by approximately minimum 7 to 8 crores. Because I need not to keep inventory for 2 months, 3 months time. It will automatically result in reduce my bank borrowings and the interest on working capital. That flavor you can see from the balance sheet, my stocks have come down already from March to September. You can see that. Yeah, my borrowing also later will come down from March level. See that also.
But apart from these, do you see any other measures or measures we might be taking where we could see capital overall cycle coming down in the next maybe couple of years?
Yeah, we are constantly working on that. Completely. Whether it is localization, whether it is, for example, post-coating line, maybe enhancing capacity of post-coat line. So it's a constant endeavor here. Yeah. Can't pinpoint right now only how many more days I will go by, but yes. Because we have two major customers like Volvo and Tata Motors, BS6 gasket which we are offering are post-coating. Previously it used to pre-coated gaskets. So my imports of the RCM, that is pre-coated steel, are also coming down very heavily.
Okay. That's all from my side. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Shikha Mehta, EP3 Capital. Please go ahead.
Hello, sir. I just had a few questions. So our margins this quarter are at around 15.5%, which is even better than what we were expecting, around 12 to 13% with the guidance we had been given. So is this 15.5% something that's sustainable, or is it, a one-off this quarter and from next quarter maybe we'll be going back to 12%?
Yeah, I told you earlier because of last quarter cost-cutting measures, including salary cut, has resulted in that. Of course, we have reversed the salary cut from 1st October. I'm hopeful that going forward, my EBITDA level should be around 13 to 14%, around 14%. Between 13 to 14% will be there. It will not come to 12% level. Don't worry. It will not be.
Right. And even like our PAT level this quarter, we've done around 10 crores, which is better than our peak level before the entire auto situation worsened and stuff.
Yeah.
So is this the run rate we're looking at maintaining, or?
No, PAT is because of the lower tax. Because we had losses in the first quarter. So it's because of tax thing. Tax thing is not permanent, you know that.
Right. All right. So can you give us some guidance?
And we should work on EBITDA. Balance is nothing else but the interest and depreciation. Interest, we are constantly working to bring it down. Don't worry.
Right. And so could you give us some guidance on the CV space? Most people were expecting it to improve by the festive season. So anything on that side?
Yeah, CV space, it's definitely improving. The business of Volvo has improved. It is now continuously improving. It has really doubled from the level of August. We have received a few days back the projections of Cummins till March, and they are talking about 8,000 engines per month as compared to 4,000 to 5,000 earlier. That what we can say. It seems to be on the going trajectory.
I think it's going to be very positive going forward. All our presidents have told us that January, February, March looks to be bumper for the commercial vehicles. And let's all hope that this scrappage policy comes out also. But that is something that has been, being talks with the government and the industry for quite some time. If that happens, I mean, that will be a double bonanza, Diwali bonanza, whatever you want to call it. It will actually announce that happens in this space.
Right. And also, could you give utilization for forging and for gaskets?
Yeah, I will give you. My gasket utilization on an average, because we have 3 facilities, on an average is 81%, around 80% you can say. In the forging, we have forging capacity and the machining capacity. In the forging capacity is around 82%, and the machining capacity is around 87%.
Okay. All right, sir. Thank you.
You want JVs also?
Yeah.
Yeah. In MNPC, it's around 80%, and the nipple leakless is around 75%. In Marble rubber, in the anti-vibration, it is around 80%. In the hose business, it is around 35%.
Okay. Thank you, sir.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Sunil Kothari from Unique Investment. Please go ahead.
Thanks. Thank you very much for the opportunity. Just wanted to congratulate you for all the fronts, the way you are really doing good job on cost measures, cost cutting, overall the way we shown our cash flow. This in a very tough time we have reduced our debt by roughly 10 crore. We already invested in property, new plant and equipment. So it's a really great job you people are doing. So this is a congratulations for all these things.
Thank you, Sunil.
Thank you.
Thank you. Sir, second, just wanted to ask or maybe just want to understand is.
Sir, your voice is very low. Cannot hear you.
Thoda sa loud ho jao, please.
Yeah, sir. Basically, just wanted to understand is what is the scope of further cost reduction we have? What is the scope of further value addition we have? Maybe over a little medium to long term, no, not in a very short term time frame. And your target to reduce the debt. I think we are already on a track to reduce this. But any numbers would you like to put? Maybe over a year or two. That is my just wanted to understand this thing.
First of all, our focus is to increase the products where the margins are good. Number 1. Because in a basket you have all type of products. Okay, we are focusing on the products like export customers. My margins are good there as compared to Indian OEM. Indian OEMs also, my company's margins are good as compared to Tata Motors. That's just giving you examples. So I am focusing on and plus all the businesses I will take in future. We have decided a minimum EBITDA level we should get in those businesses. We are working on that in a big way. So it will help future businesses, and wherever we have low margin, we are asking for price correction, and we are getting that. We got something in last year, and we are again approaching customer where margins are less for the increase in margin, and we are getting that also. That is not an issue. That is continuous exercise we are doing. Okay, that will help us in improve my EBITDA level. And because there is a limit of cost cutting. Without that limit, below that you can't do. You need to keep the employees and human also. We need to give them regular increments, incentives, because some employees have very good knowledge of the products, we can't let people go also. Okay. And regarding localization, etc., we are continuously working on that. My target is to bring in next 2 years, my import used to be around 60, 70, 80 crores. to bring it down to 30 crore level types. Not because where the customer wants a particular product, particular raw material, only there to import. Rest everything to be localized. And in future business, we are giving solutions of local material only. First preference is to give customer solution for local material. If it doesn't work, then we will give the imported solution. Okay. Now coming to the reduction of working capital. Reduction of working capital, we are working in two ways. First of all, reduction my debtors. We were working very, very hard to reduce my debtor level. My debtor days. My debtor days as compared to March 30th has come down by 5-6 days as on September. We are working further. Still my overdue debtors are in aftermarket. Rest everything is under control. We are working so hard. I'm hopeful that by 31st March it will come. It is around 114 days. Will bring down minimum 80 to 90 days by March end. And in future it should be within 90 days. We are working on a focused manner on that. And third, on the stock level, with the localization, and we are putting very, very strict control on the systems, etc., that nobody can order excess material, better EPC planning, etc. We are working to bring my stock level also down, which will reduce my it will require my banking limits further. And of course, we require money for our expansions. We are at a regular basis. We try to do it from our internal accruals, which seems to be going in a healthy way. And we are hopeful that it's a continuous exercise. Working capital, we can reduce it beyond the limit we can't reduce. And term loans, we are trying to, of course, there is a repayment plan for that. The top line goes up and the interest burden remains same and comes down further. It will help us. Plus, we are looking for some non-core assets also, and let's see how the thing goes there to bring our debt level down.
Great, sir, and wish you all the best. Wish you happy Diwali.
Thank you, sir.
Thank you. You too.
Thank you, sir.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Dipen Shah, who is an individual investor. Please go ahead.
Yeah, thank you for the opportunity and congrats for a very good set of numbers. Yeah, I just had one broad question as some of the points have already been covered. I just wanted to understand, like Anu just mentioned in the opening remarks that all the OEMs are seeing that this recovery is not just seasonal and maybe it will be more structural. So can you just throw some more color in terms of which segments are seeing some good structural demand and if possible maybe some trends on how the orders are for the next 2-3 months from these OEMs? That will be of great help. Thank you.
We did a bit of analysis about the industry. We all realize that the auto industry is a cyclical industry. So we all reached the peak in the year 2017-18. That was when the peak was in the industry. What I am personally finding, I'm no guru or I have no idea more than what people see in CNBC and EC Auto, but it's like becoming a 3-year cycle now. So you've seen the first has come down, whether it is, commercial vehicles went down, two-wheelers went down. There was a sudden craze in our country about Uber and Ola and shared mobility and all that stuff. I see that changing again because this pandemic was really happened. At least let's talk about the entry-level two-wheelers and entry-level passenger vehicles. A lot of movement is happening towards owning your own car. Whether it is in bigger towns or even in smaller towns, people are reluctant to go in the Bombay train now, for example. Rather would buy a vehicle or buy a two-wheeler and be safe than to be sorry, number one. Number two, I think also the monsoons, touchwood, have been very, very good this year for our country, which is resulting in a lot of sales in the agri space. I think the commercial vehicle has seen the worst. It was just been lying very low for a long, long time. It will pick up sooner or later. And it is picking up, as Naveen mentioned to you, that the numbers are looking very strong for November, December, January, February, March. I think the worst is over, in my opinion. And we are looking at a good bull run at least in the next 2 to 3 years, in my personal opinion. But having said that, if you look at our numbers and if you look at our growth rate, we are ahead of the industry. And there's a reason to it. Money to exchange, number one. Number two, we're also moving towards exports in a big way. Our exports, even to my surprise, our export percentage for the quarter is 27%. It used to be about 18-19%. And that also surprised me as well, that, we were looking at about 20-24%. But there's a lot of traction coming. And I think our fundamentals of our business are strong. We believe in tying up with global OEMs. We just started scratching the surface. With global players. We've been working very, very hard for the last 2 to 3 years, and now the results are showing up. So whatever we will do better than that going forward.
Okay. Yeah, that was pretty elaborate. The where I was coming from was that of late there have been some contradictory remarks coming from the OEM and the dealers. Right? The OEMs are pretty bullish, whereas dealers are very circumspect after, as to what happened post Diwali. So maybe I just thought you would have a better idea in terms of, because
we talk to Maruti, we talk to Tata, we talk to Mahindra, we talk to Cummins and all. Definitely there will be a slowdown after Diwali in the PV space. Yeah. But going ahead and, it made record level 198,000. It'll go back to about 160, 170 levels. They'll be demand now.
Okay.
Look at Kia, look at MG. They're selling their cars. Yeah. They don't have any, there's nothing in the pipeline. You see, till when you keep the Indian bottle down, he wants to buy a vehicle, he wants to move out, he wants to travel. So I think things will be better for the auto industry in the next few years.
Okay. Thanks very much. Thanks very much, and season greetings to all of you.
Thank you.
Thank you. The next question is from the line of Apurva Mehta from AM Investment. Go ahead.
Yeah, just congratulations on excellent numbers and excellent cash flows and performance. So just wanted to know the heat shield thing, that you were talking that from the local OEM. So how is it shaping, and is the heat shield going as per your expectation or better than expectation? And what is your view for next maybe 1 to 2 years?
Thank you, Mr. Mehta. As regards the heat shield business, and now we are in the process of, first of all, we previously used to have the orders from the local customers like Tata Motors and Daimler. We started with that. Then we got the business of Jaguar. Now with the 2 OE customers, we have again achieved the business of one is, I can mention here, one is Hyundai and one is Maruti. This is with this businesses which we have in hand, plus we are talking to other export customers. We will have as of today, we have a window of approximately 25 crores confirm order with us in the
Hello?
Please stay connected. We seem to have lost the line for the management. Please stay connected while we reconnect the management. Thank you for patiently holding the line. We have the line of management.
Over to you, sir. Talking about that heat shield thing.
Yeah.
We foresee that in the next 4 years, I should say, not 3 years. 4 years, it should be touching around 50 crores. Easy. Domestic only.
Well, and even in the export side, any traction on the increase side, where we can see this
Plus we are talking to other export customers for the orders. I think
we're talking to Volvo also, we're talking to Macra, we're talking to other customers like PSA. But those will come in 2022-23.
Yeah.
Okay. But what is the size of that order? These are huge orders, or this will be again a 5-10 crore kind of order?
Orders. They're bigger orders.
Bigger.
I think give us time till next quarter to give clarity. One is the domestic business that we have won from the top 3 car makers, and I think export will be a big number.
Yeah.
And also, it will also lead to Mr. Deja putting some capex for this particular line for windshields going forward, and it will be a new division by itself. Yeah. In the gasket business.
And on the gasket side, how is the export coming out, and what is your sense of export, getting new customers for export? Are we seeing good traction on that side of it?
Yes, we are seeing a very, very, what should I say, it's an extra traction coming in the export business. This year, in the gasket, my export should be around 42 crores, which was 34 crores last year because we lost 1 quarter. And with traction coming in, within 2 years, we should be crossing more than 75 crores. Easily. And it can more than that also.
And on the tuning front, we were having 4,000 engines. Now we have started, they are guiding the 8,000 engines. So that will start from when? This quarter or the next quarter?
November, December.
November.
Scheduling. November, December.
Yeah.
Okay.
And it goes up January, March.
Okay. And what was the peak revenue from the peak production from there? It was around 20,000.
Peak was 180,000 engines a year. This was in 2018, 180,000 engines. So, I mean, if you get to, let's say, 120, we should be on the right.
Okay.
That will take some time. That will take some time still.
Okay. But how is the traction from tuning you are finding? Because this is one of the things where we have huge value addition also. So, yeah. And on the forging side, any new orders which we are trying to get for the new, side of any big orders coming in the forging side?
Yeah, of course, forging is a continuous process. Of course, in Jaguar, we have got one more part numbers. BMW, adding one more part number. It's a continuous cycle. Same customer, we are adding more parts.
Okay. Thanks a lot, and yeah, Mr. Andrew.
Thank you.
And happy New Year.
You too, happy Diwali.
Yeah, thanks.
Thank you. A reminder to participants that you may press star and 1 to join the question queue. Ladies and gentlemen, to ask a question, you may press star and 1. Well, as there are no further questions, I'd like to hand the conference back to the management team for closing comments.
Thank you so much for your time. Thank you so much for participating in the call. We are hopeful and we are positive that the future is also strong in the next few quarters. The momentum continues. And just to repeat again, we're a hedge auto component company supplying across various segments and export being the rising star. With this, we'd like to call and end the conference and thank you all for joining. Thank you.
I wish you all a very happy Diwali.
And very safe Diwali.
Thank you.
Thank you very much. On behalf of TALBROS Automotive Components Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.